Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. We're here today on the 13th, lucky number 13th of May today to talk about Canadian ag markets. All right, let's get off with what happened in markets today. Canola closed very well today, near its highs at 729.30. That's up 18.70 from yesterday. Was an interesting day today in canola. We'll get into that for a second in a second here. Minneapolis wheat though was one of the losers, losing 3.25 to close at 580.75. Kansas wheat up 3.75 to 511.75. Chicago wheat up 2 to 517.25. Soybeans up 1.25 to 1072.5. Corn was down 5.5 to 442.5. Canadian dollar is still trading below 72 cents, 71.71 at the time of this recording. Live cattle was down slightly today at 211.63, and feeders closed at an even 306, which is down slightly as well. All right, let's get into the market today. Soy oil futures. We're going to start off with soy oil today. We're up about 3.4, 3.6% in late trading today on news that the proposed U.S. budget bill includes an extension of 45Z, which of course is otherwise known as the Clean Fuel Production Credit. The extension is expected now to go into 2031 and was currently set to expire in 2027. So part of this new proposal eliminated the use of imported used cooking oil and tallow. So it paves the way for more vegetable oils and things like that, which really help to rally the vegetable oil complex today. What else does soy oil have an impact on? Of course, canola. Today, canola looked a little down and out. It broke the trend line today earlier in the trading day. Went down to test the 20-day moving average, but then rallied back hard to see one of the biggest daily gains since early April. Today's price action took us above $730, posting a high of the day of $730.90. With if you were to consider an option or zero basis against that, that would have equaled a cash price of $16.57 a bushel. Some of the highest we've seen in recent times. Are elevators posting option basis? No, of course they're not. At least not that I've seen. They also they do like to fade their basis as the futures rise and kind of pick off GPOs. So I think for the most part, we are seeing a bit of a fading of basis levels since, say, April 28th, 29th, something like that. In general, I think sometimes you still see some specials and things like that come out. But overall, a little bit of a fade on the basis as the futures is now doing the work. That's not to say that'll stay that way forever. There's a very large shortage in canola, particularly for the old crop months. However, I do want to point out something on the new crop here. November canola today rallied up to up to 690 and change. It closed at 689.80 today. Very good performance on the November. We saw, I think what might be happening here is some of the spec money that is coming into the market, and I'll talk about specs or managed money in a second here, but some of that money, which was going into the July, I think is now kind of spreading itself out and moving into the November. We might be seeing some November purchasing happening as well as far as cash goes. So November is kind of outperforming or is performing very well in this market at this point in time, which just kind of shows the overall hunger or the overall value that is seen in vegetable oils and particularly canola at this time. Talking about the commitment of traders, we were seeing, or the last commitment of traders report showed 80,245 contracts long. Now that was as of last Tuesday. Okay, so it doesn't take the gains that we've seen the last couple of days into account. We will see another report on Friday that will show the end of today's. So the largest that we've seen in history is 85,360 contracts. I'm betting that Friday breaks this record We could even get potentially into the 6-digit figure where we get up to close to 100,000 contracts long, depending how much of this market move was made by managed money or speculative traders. So we want to watch for that as we come out of the end of the day on Friday. It's been a very good market for canola. Just kind of wanted to show as well where we are at seasonally. So here's the November seasonal chart. If you were to plot May the 13th on this chart, you'd be looking somewhere right around here, So, hey, are we going to see the seasonals play out perfectly this year? I think it normally peaks, according to this chart anyway. This is a 10-year chart on canola seasonals. This is about the 16th or 17th of May, or May long weekend-ish. So we'll see if that plays out. But I find it interesting that we are seeing rallies into this seasonal pattern, kind of like clockwork, if you will. All right. Also, just kind of looking across the pond here, August Euronext rapeseed also saw gains today, breaking kind of out. It has kind of over the last couple of days broken out of its consolidation and triangle kind of pattern. It did break out heavily today, and now trading above all of its major moving averages. As you can see here, there's some resistance that could come in at about 495. This is euros per metric ton. And we're getting close to that today, but definitely we've got momentum on our side now here with this commodity as well. So it's not just canola; it's a collaboration of a large amount of vegetable oils, and that is creating this strength here today. One other market that we wanted to talk about today was crude oil, which also rose sharply today as U.S. President Trump warned of more intense sanctions on Iranian crude oil exports if the nuclear negotiations were to not go well or to fail. So, we're kind of seeing, the oil market is hot. Everything oil is gold. So, if you know what else is gold is a subscription to Ireland Como Lafoy's Premium Insights, which is only $99 Canadian per month for our daily morning reports, our weekly in-depth reports, and all of our hot takes. And the bonus is it doesn't include my terrible sense of humor or horrible puns and transitions. $99 a month Canadian. You can cancel anytime. Go to CanadianAgMarkets.com to subscribe. All right. Speaking of horrible, spring wheat continues its pilgrimage lower today, and spring wheat finished at 580 today. Hard red winter wheat is kind of settling weather prospects for Canada and the northern plains, and the U.S. continue to see rain in the forecast. Conditions overall are improving. Planting progress has been going well in Canada, so the Minneapolis wheat market is continuing its move lower today. There still is quite a big premium between Minneapolis wheat and some of the other classes of wheat, which we'll get into here. Here's the winter wheat. We actually saw a little bit better action on the winter wheat today. They did still make new lows on the day, but managed to climb back and make a higher close in Kansas. Kansas wheat settled at 511, Chicago at 517. And yes, you are hearing that correctly. Soft red winter wheat is trading at a premium to hard red winter wheat at this time, which does signal that there is no perceived shortage of wheat protein out there, which does have its risk factors for the Minneapolis market as well. Just kind of wanted to pull back or point out that wheat, this is Chicago wheat monthly chart. The pricing levels do not look sustainable here. The last time we saw wheat trade this low, it was during COVID, when commodities were just out of favor in general. Although the saying, the market can remain irrational longer than you can remain solvent. So I'm not suggesting that we're going to see a bottom anytime soon or a V bottom or anything like that. But just wanted to point out that it's been a while since we've seen wheat down at these levels. Yesterday, corn looked like it was going to see a positive follow through from the USDA report, but that faded late into the day to post a loss. Today, those losses continued. Nearby corn pushed down to support near 435. That would be this level right here, before recovering slightly. This is still the lowest close for the calendar year thus far. These lows over here are from November of 2024. So corn still remains out of favor, even though we would have looked at yesterday's USD report as being favorable or at least friendly. But the market isn't trading it that way. Soybeans, a bit of a different story. So we'll end today on a high note. Soybeans closed at 1072 after the rally yesterday due to the USDA calling soybean carryout under 300 million bushels for the coming up crop year. Beans are still trading high in the box. I like what I see here. I think we could see, it rally into the 1070 to 1080 area if this strength is going to continue. All right, that is all we have for you today. Thank you for tuning in. We will see you again tomorrow.